Boom, we are back. We are back. We are back. And welcome back to another episode of What? Find Your Freedom. And listen, man, we have an awesome guest today. But before we get into this guest, you already know we have something ultimately free for you, is easily downloadable. Go to www.findyourfreedomrei.com / freedom kit. That's right. www.findyourfreedomrei.com / freedom kit. Go get that right now. All right. But man, so, here at Find Your Freedom, we don't have guests, we have friends. And when you think about this, right, you say, hey, we all know Uncle Sam, right? And we all know Uncle Sam always got his hand out. And not that he got his hand out, but he's always ready for you. So you can't hide from him. He'll come and get you 6 years later, or he'll come and get you the next day. But Uncle Sam, is crazy in my mind, but we have to deal with our uncles. And to deal with our uncles, we always got to go out and get somebody who knows just a little more than what we know and how to deal with Uncle Sam. All right. With one, making sure that you can save on your taxes or giving Uncle Sam all your money. And then two, making sure that when you give him your money, you gave him exactly what you were supposed to give him. And this next guy, he's the right person for that. All right. He's the person that you 100% want to go to when it comes to dealing with Uncle Sam. He calls himself a family man, which I love, right? Because family is number one. It comes first. And he also considers himself the master of taxes. All right. So we're going to get into all of that and to complete his coolness. He also a foodie like Omid and I. So with that being said, Billy, how you doing, brother? How you feeling?
I'm feeling great, and I'm ready to share what I know to help real estate investors and anybody else who wants to save on taxes this year and in the future.
I love it, love it, love it. Hey, Billy, before we jump into any and everything, can you just give a little background on yourself?
Definitely. So I knew I wanted to be an accountant when I was younger, but it was mostly because I didn't know what else to do. I took some courses in college and I wasn't too sure, but then I took my Tax 101 course and I knew that I found the right spot for me. I continued my education with getting a Master of Taxation and started my career helping real estate investors for and helping save it on their taxes. And I've been doing it for over 10 years and I love it. I find it my moral duty to help everybody save as much in tax as possible. So that's why I'm here today to talk a little bit more about that.
So cool. I know there's there's so many components of taxes. So there's like the tax preparation part. Everybody thinks tax is just like one piece. And then there's like tax strategy and structuring. So maybe if you could just kind of break down like the differences and like why it's important to have somebody that can help you kind of plan things out outside of just doing your taxes themselves.
Definitely. So a couple things there. Basically, when you get to April 15th, when your tax returns due, there's not much that an accountant can do to help you to save on taxes because all of your information comes from the year before. Basically, April 15th of 2024 means everything that's happened in the year 2023. So, working proactively with somebody, a tax advisor especially, can help you get ahead of that and plan for when your tax return is due on April 15th. And then you also want to work with somebody who has a large client base or is actually doing what you're doing, because they're going to have a better perspective than somebody who's just, taking numbers and putting it on a form, because they'll understand the ins and outs of what you have going on and how to optimize because they see what everybody else has going on as well.
That's really good information, and I'm happy you shared. So I guess for the listeners, when you sit back, everybody just know the date. They say, "Oh, I just got to have my taxes done before this deadline." All right. Um, like, what do you suggest, and how you suggest a person should set up with their CPA on how frequently they should come to them, so when the 15th come around, is not last minute, but all through the year, you got whatever benefits you were supposed to get or did whatever you needed to do to save as much taxes as possible when that time came.
Well, that's a great question. The way that we operate is we get an understanding upfront of what your near-term and longer-term goals are. That way you can come up with a cadence that makes sense for you, right? Because if you have nothing going on, generally speaking, you don't need to talk to your accountant. But if you know that you're going to sell 3 properties next year, you can work with your accountant to say, okay, let's meet after property 1 sells. We'll see how it does. Did we hit the numbers that we thought we were going to hit? Something like that. Knowing those taxable events is key, and then just reaching out ahead of those taxable events is the best thing that you can do. But like I said, the sooner the better, because if you can share your goals with somebody, they can work with a good plan and a good cadence that works for you.
Oh, so I think there's a lot of W-2 employees, and there's the idea of, hey, I want to like transition off, and I'm going to leverage real estate to do that, or use real estate as a financial tool to kind of build wealth. So as far as recommendations, like somebody says, oh, I want to get into this niche or that niche. At what point should they end up consulting? I know you kind of mentioned, before, after, like an actual sell, but what about like when they're actually trying to plan out like a long-term plan? Because sometimes I think investors, they don't know what the right way is. It's just, hey, I hear you just go buy real estate and then you save on taxes. So what are like some, I guess, obstacles that somebody can overcome ahead of time before they even get into investing themselves?
Definitely. That's a great question. One thing that I always say is that it's always best to kind of have an understanding of what your structure is going to be ahead of time. There's a lot of free resources that help you get 90% of the way there. And then once you're in a position where you are off the ground, I would say it's absolutely pivotal at that point to work with an accountant or a tax advisor so that you're not getting too far down the line before too many things are screwed up. I was at a meetup a couple months ago, and a woman with no rental property said to me, I want to work with you. I want to make sure I get everything done on the outset. And I go, well, you can invest in that knowledge with somebody who knows exactly what you have going on, or you can take that investment and invest in yourself and just get started. And for me, and especially with my kind of story, getting started has always been kind of an obstacle for me. And when I got started, it was kind of out of necessity. So to me, I would say just get started and make sure that you're, taking advantage of free resources to start. And then from there, once you get off the ground, then it's probably important to make sure that you get an advisor that, not like I said, has a good understanding of what your ultimate goals are, and then they can help you from that point.
Good. So, let's take a guy. We can call him John, right? So, we got John. He took your advice, and he took his money and he went out into the real world and purchased I don't know, a multifamily property. Let's call it a duplex, right? So he got some tenants coming in. He got them. So at that point in time, because when it comes to taxes, it seems like, I'm in this boat too. We're like dumbfounded, right? When it comes to taxes, that's the reason why we hire you guys, to sit there and help out. But now that he got this tenant, all he really know how to do is what? Collect the money and address any issues and problems, right?
Right.
And when he's collecting his money, he knows how to pay expenses. But a lot of people don't, or maybe they forget that there's this tax component that you're supposed to take a little bit of money out and put away for taxes. So when a person who's like green in that respect come to you, like, how do you help that person and what do you do to structure them out so the next time in the next few visits that they come, they're putting taxes away, they're doing everything they supposed to do, because they might not even know that they're supposed to write down their expenses, or
Right.
they replaced the toilet or got a roof repaired, like, so like walk John through that process.
Yeah, exactly. So, and that's a great point, because when I do speak to newbie investors, I always say, kind of like I said, the free resource, right? The first thing you should do is get a business bank account. Most people might open an LLC, but you don't necessarily need to. You do need to have an EIN. But you open that business bank account and then start running all of your business transactions through that business bank account. And the reason why you do that is so that you get all of your income and deductions in one place. If you wanted to use a credit card for expenses, you could do that too. But the key there is knowing that, if you see money coming in and you have profit at the end of the month, well, it's a good idea to say, well, I might owe some tax on this profit. But, of course, the great thing about real estate is that it's so easy to kind of use paper losses from depreciation, right, to offset that income when you first buy a rental property. That, like I said, if you just get started, there's working with a competent tax advisor should be able to get you to a situation where you don't owe tax, at least in that first year. And then from there, we can kind of subsequently, like I said, come up with a plan on how to make sure that on a continual basis, you don't pay tax or pay as little in tax as possible. So I would tell John to, like I said, get the income and the expenses all in one place. And if you're really killing it and making profit, it's probably a good idea to maybe say, let's put 20 to 30% aside for taxes and just put it in a savings account, hold it there until April 15th. And that way there's no surprises.
So let's continue the scenario. So John, he has his business. It's running. We have the business bank account set up. Now, how do I know what is as far as setting up bookkeeping? Because I think when I ask different investors, there's such a wide spectrum of bookkeeping from, a box of receipts from like the old school approach to, something on an Excel spreadsheet to different software programs to somebody that's overseas talent or virtual assistant from a different country or a local stateside person that's doing the bookkeeping. So maybe walk through like what is the best practice for somebody who's kind of getting started and they're trying to figure out the best way to stay organized upfront, so that way, when you're actually doing your taxes, you're not like chasing receipts or chasing, creating like a P&L, retroactively. So, what are some recommendations on that?
Yeah. So one thing I would recommend is once you have that business bank account, you can connect it to an accounting system. There are free options out there. And even if, a lot of people go accounting, well, that's not me. I'm not a numbers person or I hate math. Really what these accounting softwares do for you is they take your bank account and then they give you a prompt to categorize your transaction. And some of them even have a way to store the receipt with it, right? So if you take a picture of your receipt and put it into a storage file as a picture instead of a paper receipt, you can then connect that digital file to the transaction as well. So there's really no excuse to not just simply set up an accounting system on the get-go. And like I said, just overcome the fear of that this affects an accounting system. Just get it set up, and I promise you will be thanking yourself, especially this time of year. We got Thanksgiving coming up, Christmas coming up. You don't want to spend your time going through your old shoe boxes of receipts. You want to spend this time with your family and friends. So, even though we're coming up on tax time here eventually, just get the accounting system set up and then you won't have to sweat it.
Cool. Now you mentioned that there was a few free ones out there. Everybody liked that word free. Do you happen to know any offhand you can recommend?
Yeah, so one that I know is free, at least currently, is stessa.com. It's basically assets spelled backwards, STESSA. And it has a lot of free features. It used to be completely free, but it still has a lot of free features. And clients would always rave to me about how good it is to use, and which is really weird to say for an accounting system, but people love it. And so as a result, you got to take advantage of that, especially if you're getting into real estate, because like I said, you don't want to be spending time going back in time. You can just connect your bank accounts, the transactions flow in there, and you just categorize it into the correct account.
No, I like that. I think Stessa, it's a great way. So let's say somebody has a Stessa. At what point do they graduate? Let's say they start with a Stessa. I feel like it's a common one that people use. And then, then let's say you get, a second property or a third. Then what is like the preferred one that you like to work with, let's say, as, somebody kind of transitions over? Or like, what are some best practices as you're kind of building this portfolio? This John decides he's got another two, in the pipeline and he's killing it.
Yeah, John's not busy enough, so he needs to buy more.
Yeah.
So we always recommend that once you hit around 3 properties, you probably have enough moving parts to say, all right, we got to graduate a little bit here. I started this firm with the vision of meeting clients where they are. So I'm not going to say I prefer one over the other, but 2 that we work most closely with is Xero.com, Xero. and much more commonly QuickBooks Online, of course, or QBO for short. And those are obviously great options. And the benefit of doing that is that you get a much more official, graduated kind of experience, official accounting software that can handle, however big you want to scale up for quite a while. I've seen some pretty large organizations run on QuickBooks Online. And as a result, I think that's a good next step, because you'll have enough moving parts to where the accounting, actually starting to pay for the accounting month in, month out is going to make sense for you.
Yep, that makes sense. And also is a tax deduction, right? You got to throw that out there,
Absolutely.
right? Tax
Yes.
deduction,
Ordinary,
ladies and
any
gentlemen.
expense ordinary and necessary.
Awesome. So let's keep with this, John, man. So remember, you don't know what you don't know, right? So as John continued to, run his real estate empire, his two units that he got his empire, right? How do he know that the CPA that he's working with is a good CPA or not? Are there any signs or things that John should look out for to say you are really great, or ooh, I should find somebody else?
Definitely. I had somebody come up to me once at a meetup, and they were asking that basically very same question. And I told them that the best thing that you can do is take your knowledge of what you have going on, because you got to do your own homework and do your own research. If you take it to them and they're going, oh yeah, you're 100% right, let's get this done, and oh, by the way, we should also do XYZ, you know that you're working with somebody competent, because you know your situation well enough to know, okay, this is what I should be doing, but can you help me? And then that's when the tax advisor comes in and says, yes, I understand what you're trying to say, I understand what you're trying to do, here's how we can make it successful, or here's why we can't, regarding your specific situation. And then also on top of that, having a few other suggestions as well would give you a really good indicator that they know what they're talking about. Oftentimes, if you come to, if you find all these ideas and find in these free resources like online Facebook groups of things that other people are doing, and you're constantly bringing them to your tax advisor and they're saying, no, you can't do that, no, you can't do that, no, you can't do that, that's probably a good indicator that it's time to, shop around, find somebody else that is willing to more work with you, just so that you have the confidence that you're getting the right results. And if you can find a second person who's also telling you, no, you can't do that, no, you can't do that, you probably should just, make a more concerted effort to do better research next time.
So I know, like, tax code, there's like it's so big, and there's so much to know, and even there's like interpretation of code. So there's maybe some some accountants that's more on the conservative side, and some more on the maybe aggressive side. How can you tell as far as what is like the appropriate risk tolerance for your own situation? When even like, and maybe like we can transition that into like the sexy thing, which is write-offs. So like, yeah, what are maybe like some top write-offs or common write-offs that are overlooked that maybe people can leverage as investors or as they're getting into the business?
Good question. So to me, you'll know you're working with a good tax advisor if they have a network of other tax advisors that they confer with. That way, if there's a consensus approach to your situation, basically, if you say, I want to run this by you, Mr. Tax Advisor, and they go, John, let me check my network and get back to you. That way, you'll know if you're walking that line between conservative and aggressive, because they'll have some other people who are kind of in your corner, right, and doing the same things that you are. As far as write-offs, going back to what I said about the accounting system, the most commonly missed deductions are the ones that you just forget about, which is why it's so crucial to get that business credit card or business dedicated credit card and that business bank account set up on the outset, so that when you're using those transactions, the IRS code says any expense that's ordinary and necessary to your business. That's a pretty broad interpretation, right? So as long as you run it through the accounting system, you'll be able to have the confidence that you are able to write it off. On top of that, I think people sometimes forget about using their vehicle, which can be tricky because you can't count commuting expenses as expenses. But, if you go from property to Home Depot and back to do some work on your property, that's going to be a write-off you may forget about, because you'll take a picture of the Home Depot receipt, but you might forget to say, oh, it was, 20 miles, which is another $10 deduction, something like that. I guess $12 now, but you get the idea.
Man, ooh, sheesh. Yeah, I gotta get better, right? Because look, I'm over here like, let me write down this because I don't deduct anything. I run the Home Depot. I run the Lowe's, and anybody that knows, sometimes I feel as though I need to go fix something. Like I get mad, Billy. Like when somebody give me this outrageous price, I feel as though I got to go prove them that this shouldn't cost this much. So I go fix it myself. Why I do that, I have no clue. But you got to run the Home Depot 15 times, right, back and forth because you forgot this little washer this time. You've got a
right.
bolt this time, a screw this time. So for me, I got to get that. So listeners, that's a big one. I'm telling you. You got to put that on there. So let me ask you another question, and this one might be a little challenging, but you know who Steve Harvey is, right? So Steve Harvey tells this story that he had an accountant and he was paying his accountant, and somehow, some way, the accountant wasn't paying his taxes. Now, granted, the check he was probably sending his accountant, is nothing like the check I sent mine. Like I probably can reduplicate that check. He probably can't reduplicate his, right? But how do you officially know that your accountant filed your taxes and you don't fall in the same category as Steve Harvey did with, of what he says that he paid his accountant and his accountant never paid the tax bills?
That's a good question. I think the most important thing is, working with an accountant who has some kind of system set up to kind of alert you of what's going on. I think where a lot of accountants fall down is lack of communication. Usually little things like your tax return's been filed, your tax return's been accepted, you need to make this payment. Usually those things get captured, but you don't want to work with somebody where you send an email and 2 weeks it goes into the void because you have no idea if they're working with you, if they're working on your side, things like that. So just working with an accountant who communicates not only the little things, but also the big things and has a plan for your strategy on what you're going to execute on year in, year out, I think is the best way to do that. To me, I'm not sure how Steve Harvey could have gotten that situation, but like I said, there should be the communication of your tax return's been filed, you owe this amount, and then if you have any questions about that and you reach out to them, they should be answering those kind of questions promptly.
Real quick, because Fat Joe, Fat Joe had the same problem, but he went to jail. Now, I see him been paying taxes for a long time, and I'm like, come on, guys, like I'm trying to figure out how did they didn't know, so I want to make sure that I don't want to go to jail. I want to make sure that my guy is there a website I could go to sit there and say, oh, what, okay, they did it just to double check or anything like that?
Yeah. So if you can get to know the IRS website really well, I recommend everybody goes out and makes an account with your, ID me, ID.me or whatever that is, where they check your driver's license and confirm who you are and everything else. And then you can have a one-way window into the IRS and your tax account status. So if you missed a payment or forgot to file, it's all right there on the website. So they make it, like you said at the beginning, really easy to make sure that you're, paying your dues.
What's that website one more time?
Just irs.gov, and then there should be a my account area, and then
Lenny,
PSA
do you even
for
have time to
everybody
go
listening.
On there?
PSA, pull up your last couple tax returns, and if you don't remember stroking a check for whatever they say is due, then you might have problems, I guess.
Yeah. There you go. All right, so I kind of wanted to transition the conversation as far as what are some major tax strategies for W-2 employees to offset some of the taxes? Because I know there's people who are in the bucket of high income earners, and then they're like, how do I pay so much taxes? And they have the very traditional way of doing things, which is, they have a 401k, they contribute to the 401k, maybe they have a Roth IRA to some degree, health savings account, I guess. But like outside of that, like outside of some of those standard tools, is there a common scenario or a more common way people, I guess, reduce their taxes?
Yeah, so I would say for first of all, we shouldn't pass off HSA and 401k. We call that the low hanging fruit.
Okay.
Basically, when you have a wage and you're a high earner, honestly, sometimes that's all you can do. Without starting a business, right? There's a couple things, but honestly, at the end of the day, you're just trying to shield as much of that W-2 income for your benefit as possible. Outside of that, a lot of people
Sorry,
talk
sorry to
about.
interrupt. Could you
Sure.
explain HSA? Because I think a lot of people aren't. I feel like even though there's like employers provide it, I still feel like people don't really understand it to a degree.
Yeah, absolutely. So the health savings account HSA is for people who have a high deductible health plan through their employer or on the healthcare exchange. And the benefit of it that is that it's, for a family, it's indexed how much you can deduct every year, but it's around $7,000. And what you can do is put that money into an HSA, which grows tax free. And then when it comes out for qualified expenses, either now or in the future, those qualified expenses are also tax free. So, if you have to go to the pharmacy to pay for a prescribed medication, then it's essentially you can pay with it with tax free money. And the benefit of that is that, you may go, well, today I'm healthy. I go to the gym every day and I don't foresee a lot of medical expenses. But like I said, you can put it into an HSA and it grows tax free. So when do you actually need that money? Usually is when you're older and that the funds will be there and available for you to use. So it's really, you could think of it as a retirement account because more likely than not, unless your kids are, jumping off of bridges and things like that, you definitely need it when you're older to take care of health expenses and things like that. So it's like you said, shouldn't be overlooked because it's basically another retirement account and could also be a way to pay for expenses today tax free. And so like we said, the other things that people do who are high wage earners, short-term rental loophole is a common buzzword we hear these days. Basically what that means is that if you set up a short-term rental to have people stay at your place less than 7 days on average, and you're the one who is the main person running the short-term rental, there's a couple official stipulations there, but that's the idea. And you can use losses from depreciation, you can use losses from supplying the Airbnb or fixing it up yourself, things like that, to offset your W-2 income. So it's usually a really good investment because if it rents well, you'll have that cash flow, and then also you'll have an appreciating asset. And then the returns, like I said, if you can do a good job, are usually a little bit better than, a long-term rental where just somebody pays once a month, things like that. So a lot of people like that as an investment option that helps you shield W-2 taxes. Another thing that is a little less common, but it's also a little bit harder and it's much riskier, is investing in an oil and gas fund as a general partner. What that allows you to do is say, if you invest $50,000 into this fund and you take on unlimited risk and liability, you're able to write that $50,000 investment off, in the first year, because they take that money and do exploration of oil and gas reserves so that they can hopefully make profit, right? But like I said, it's very risky and it's not for everybody. So, but it's a common scenario we see among higher wage earners.
I never heard of that one. Oil and gas fund.
The key is being a general partner. If you're just a limited partner, your liability is limited, and as a result, it's just like any other passive investment. But yeah, if you sign on as a general partner, you're able to deduct any exploration costs that the fund incurs.
And that's up to a 50,000 that you mentioned.
So I'm sorry, that was just a scenario.
Oh, okay.
You can invest
I'm on
$500,000
it.
if you have it, but that would be a lot of money at risk.
Gotcha. All right, cool. All right. Man, that threw me off. But hey, you know, everybody makes a different wage, right? And then everybody throw out this high net worth income. Well, what does that define as? Is that a person who makes over 100,000? That person who makes over $1 million a year? Like, how do a person know that they fall in or fall out of this high net worth person?
I do think it's different for everybody. We helped somebody last year who their wages only totaled about $50,000, but because they had, a really good solid plan for their short-term rental, um, we were able to help them execute and completely wipe out their tax bill, um, and actually have some carry forward for future years as well. So to me, if like I said, the key is getting started, and then once you're off the ground, getting a tax advisor who understands your situation, and then hopefully, if you're working with somebody reputable, they'll let you know if they can add value to your situation is not. But to give you a direct answer, I would say, it's easy to look to the definition of a accredited investor, which is of course 200,000 for an individual and 300,000 for a married couple. Um, if you're subject to any phase outs from the IRS tax code, for example, around $400,000, you as a married couple, you phase out of qualified business income deductions, things like that. Anywhere up around there, probably 200 and up is probably somebody we're talking about, if that answers your question.
It does.
So like, I hear this podcast and I'm interested in just kind of getting started. Maybe I haven't really looked into too much like strategic planning. Like, what are the typical steps like to kind of just get involved and kind of get started to know where I land and what I should be doing and those sort of things, and what services are out there for me to be in a position to kind of plan it out for the future?
I would say it really is going to depend on what you're trying to do. For example, if you're looking to, start a barber shop, that's probably going to be different than somebody who's looking to invest in real estate. But I can speak for people who are looking to invest in real estate. I think that if you go look online for Facebook online groups, if you look at meetups in your local area, you'll be able to get started there. And then usually those forums have presentations by people who are offering services, and you can listen to what they have to say and ask them questions about how it applies to you, because usually those forums are pretty interactive. So I think that would be a great way to get started, is kind of look for people and groups that have common interest to what you're trying to do, and then hopefully that group is providing value to you by bringing you those service providers and things like that. Does that answer your question?
Yeah.
Yeah, cool.
Awesome. So, Bill, let's change the subject a little bit here. So, we met in the conference down in Austin, and I'm not sure was that your partner, or is that one of your staff members? He's a cool dude. He's funny, right? Yeah. He's super funny. So, I guess tell us a little bit about your journey, man. Like,
Sure.
how did you? Because it's what is it? Summit Advanced Tax Strategy,
That's
right?
correct.
Like, well, what was your life before that, and how did you get there?
Yeah, so I was, like I said, a tax advisor for real estate investors for over a decade. It's something that I kind of fell into, but also something that I found a passion for along the way. What happened is I was a partner at the Real Estate CPA, which is a large virtual firm, and then I decided it was time for a change. So I took a position at a local real estate focused firm. But while I was there, we found out that my wife had cancer, and as a result, we found that the best thing to do would be to leave our current situation, move back by family. And with her schedule and keeping up with my three boys, I didn't really think that anything else would work besides starting a business. So kind of like I said before, this business kind of started out of necessity, but it's always something I had in the back of my mind that I wanted to do as well. And then that's the reason why I say, just get started, because you don't want to be in a situation like I was, where you're starting because you have to. You want to be in a situation where you can plan it out and take the right steps and be a little bit more measured in your approach. Whereas I just kind of had to make it work and figure it out along the way, in amongst all the chaos that my life was currently in. So I definitely don't recommend doing it my way. Just start if you want to get started, and make little steps along the way so that you can make improvements as you go along. And it's obviously worked out for us. And we have a lot of fun doing it, but like I said, I can't recommend to everybody starting it out of necessity, because you can't do it the way that you want to. You're doing it out of, like I said, in between, scheduled meetings with my wife and the kids' school schedule. It was kind of a mess to start, but we made it so far.
So what's like the biggest obstacles, I guess I would say, for you as you've kind of grown your business, and like have you been able to overcome those?
Yeah, so it's definitely been relying on my network. I work with a lot of great real estate tax advisors who've come before me and done what I was trying to do, and they've been very generous with me in lending their time and also leveraging my network within the business. Like you said, I have a business partner. Couldn't do it without him for sure, and um, and then also like I said with people starting out, going to real estate meetups and Facebook groups. I spend a lot of time doing that as well. And, telling people what I'm about and what I'm trying to do has helped a lot along the way. So, as far as obstacles, I think my biggest obstacle was just fear. I didn't get started sooner because I thought I had to be perfect, or I thought I had to have more time. So the world kind of, slapped me in the face and said, okay, now it's time. Like I said, I don't recommend that, but I'm so grateful it happened because I'm having a lot more fun now than what I used to do.
It sounds like it. And your business partner name is Mike, right?
Yes.
Mike. Okay, cool. And so I mean that fear, it's in everyone, right? Some people just know how to face it and go at it and just say whatever, and some people be like, put the X up, like I am not going anywhere near it. Um, what I guess tips or suggestions would you give a person who see the fear and they're running away from it rather than running to it?
Yeah, I think where people, at least people like me, would probably be fearful of either not doing everything perfectly, or they're more scared of the bigger goal and how much work the bigger goal ultimately is. But if you break everything down into little steps, I think that you can eventually make your goal, or you find out along the way that maybe you want to change course. Summit ATS was not always going to be what it is today. It was originally going to be a little bit more online and a little less personal. But along the way, I found that what I really enjoy is making an impact with people directly, and being able to help people on a personal level. So that I'm really glad that I took steps along the way to say we're going to pivot here and actually go something that makes more sense to me overall. Now that I'm in here learning and doing what I thought I would be doing along the way, if that makes sense.
All right, so I feel like you've kind of had this interesting journey, and so how would you describe for yourself, like what does finding your freedom mean to you?
So finding my freedom has always meant to me doing whatever I want whenever I want, and having the security of knowing that whatever it is going to be okay. So while I'm very big on of course making commitments to people, and keeping those commitments. Ultimately at the end of the day, my ideal day is to be able to say, I'm going to help a couple people, and then I'm going to take a little bit of time for myself, and then take a little bit of time for my family. And if I can do that every day, I would say that I've found my freedom. So, and I would say we're almost there. We're still in startup mode, but we're pretty close. So.
Boom. Awesome. Yeah, man. So I met you, I met Mike down in Austin, and at first I didn't know what, you guys do. We just kind of just had a conversation, kicking it off, laughing and joking. And, I can see why you're successful, because you and Mike have a really good personality. You guys are smart and guys are cool, and no disrespect, but usually when you talk about CPAs, the stigma behind it, right? And so those listeners that's listening right now, that's looking for someone that's a little more personal, like you, like Mike, right? And in the business, I guess, how can they contact you? How can they get in contact, with the company to sit there and use your services?
Yeah, so if you want to see more from me, my handles on LinkedIn and Instagram are Billy Withers Tax. And then if you want to find out more about the company, you can go to summitats.com or email us at hello@summitats.com, and we will be with you promptly.
Boom. Awesome. 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 All right, now, Billy. Now, right now, this is the best part of the show, right? Outside of the fantastic content that we just put out. What we like to do is we like to do this big boom session, right? So what we do is I count to three, 1, 2, 3, and in a uniform manner, all three of us say boom. boom, and hold it as long as we can. But you got to bring it from the stomach and the lungs. So you got to sit up, bring those shoulders back, and yeah, there we go. For the listeners that can't see this, we all sitting up like ready. Like I'm giving you an opportunity to turn your radios down because it's going to be loud. So with that being said, y'all guys ready?
Let's do it.
All right, on 3. 1, 2, 3. Boom! Awesome. Check this out. We just had a great friend, here on our network at Find Your Freedom, Billy and his company, Summit Advanced Tax Strategy. I'm telling you, get in contact with him, follow him. He is an individual that knows what he's talking about, knows what to do, and know how to help you get to your goals, and also in some cases help you structure your goals. So make sure that you reach out to him and listen to this episode. And when you do, what we ask for you is just leave an honest 5-star review. Why? Because we want to bring on more Billies here so we can sit here and give you the information that you need so you can take not just 1, but 4, 5, 6, even 10 steps forward in your life for you and your family. All right. And with that being said, make sure that you share this episode. Share this with all your friends, your mother, your brother, your sister, your cousin, your aunt, your uncle. Share with all your coworkers, the ones that you like and the ones that you don't like. Until the next episode of Find Your Freedom, we talk to you soon. Peace.